Let me share my screen. Oops, cancel. Okay, share. Excellent. All right, well, let's get the ball rolling. Kay tawas juice shop, kay tawas tawa shop, say hopa, wahena mehuga yupshka yutse o shrat honosta. Good morning and welcome. It is with great pleasure and honor to be with you today for our Four Winds Diversified Project Access to Capital webinar. My name is Russell F. Pedro. I currently serve as the Senior Certification and Business Specialist for the Four Winds Diversified Project and President and CEO of Data Management of New Mexico. Before we start, I would like to acknowledge that we have over 93 registered participants representing 25 states to include New Mexico, Arizona, Colorado, Montana, Virginia, Texas, North Dakota, California, Florida, Georgia, Ohio, Washington, D.C., Kansas, Oklahoma, Oregon, Alabama, New York, Washington, Maryland, Minnesota, Michigan, Arkansas, Utah, Alaska, Illinois, British Columbia, the United Kingdom, and of course the Navajo Nation. We hope that you are happy, healthy, and well in your respective communities. I would also like to acknowledge that we do have some MBDA partners and business centers represented here today, so welcome MBDA family. Today, our webinar theme will be based on the following words: strategies, successes and failures, government contracting, and lastly end with advice. Throughout the webinar, I will be asking questions to our panelists, which we hope will spark an ongoing conversation, provide you strategies, and prepare you and your organization in the pursuit of obtaining access to capital. Before we move forward, I do have a couple of webinar housekeeping duties. At the bottom of your Zoom webinar platform, there is a Q&A dialog box. Please use the Q&A dialog box to ask questions. So as the presentation is going on, you can start collecting your questions. And at the very end of this webinar, I will read and answer each question presented to our panelists and team. Your feedback is very important to us, so please fill out the end of the webinar survey, which will be emailed to you after our event. And thank you for your participation. Today, our Four Winds Diversified Project team would like to welcome and thank in advance Ms. Veronica Lane, Vice President with Native American Bank, Mr. Nate Lee, Vice President with Bank of America, Mr. Fernando Ponce, Regional Business Development Officer with Primary Funding Corporation, Ms. Nicole Johnny, Investment Associate with Raven Indigenous Capital Partners, for joining us today to share their in-depth knowledge and strategies to garner access to capital. So thank you all. So who is the Four Winds Diversified Project? Our innovative project was conceptualized by Southwest Business Development Consultants and Data Management of New Mexico and is currently funded by the MBDA Business Development Center, the United States Department of Commerce. We are currently in our third quarter of our 5th year and are located at the Indian Public Cultural Center in Albuquerque, New Mexico. We are very honored to share our services and resources with you. And the beautiful thing is that there is no cost for our core services. We believe that our client success equals our success. Our Four Winds Diversified Project currently serves over 180 clients, of which 80% are Native American owned and operated. Our clients range from construction, IT, marketing and media, consultants, healthcare, real estate, renewable energy, hospitality, entertainment, waste management, insurance, architects, engineers, software developers, and project management firms, nonprofits, and tribes. And we are honored to say that we have clients from across the nation, Now for team introductions. First and foremost is Mr. Michael D. Peacock, who currently is the CEO and President of Southwest Business Development Consultants, as well as project operator for our Four Winds Diversified Project. I just want to make a quick shout out to Mr. Peacock. His birthday was yesterday, so happy birthday, sir. Next, we have Ms. Darla Jones, who serves as our project director for our Four Winds Diversified project. Ms. Jones currently oversees our project and is the primary point of contact for all business inquiries. At the very end of this presentation, I will have Mr. Peacock and Ms. Jones and myself and everybody on this panel's contact information. As mentioned, my name is Russell F. Pajo, currently the Senior Certification and Business Strategist for the Four Winds Project and CEO of Data Management of New Mexico. I've been very fortunate and honored to work with minority, Native American-owned, or youth tribal governments over the last 20 years here in New Mexico, the Southwest, and nation. My personal motto is access to capital plus access to opportunities equals job creation and community and economic development. Without further ado, it is with great honor and great pleasure to introduce our panelists. Again, we have Ms. Veronica Lane, Vice President with Native American Bank, Mr. Nate Lee, Vice President with Bank of America, Mr. Fernando Ponce, Regional Business Development Officer with Primary Funding Corporation, and Ms. Nicole Johnny, Investment Associate with Raven Indigenous Capital Partners. I will now turn the virtual mic over to our panelists to each give us a personal introduction and tell us about who they represent. Ms. Veronica Lane, the virtual floor is yours.
Thank you so much, Russell. Good morning, everyone. Veronica Lane. Russ, you can go to the next page. Good morning, everyone. My name is Veronica. I am originally from Toflagai, New Mexico, so just north of Gallup. I currently reside in Denver, Colorado, which is where Native American Bank is headquartered. I'm a vice president and business development officer at the bank and have been here for over 8 years. Started out in the credit department, so was an underwriter for the bank and then moved over to the lending team. So now I do a lot of business development for the bank and yeah, really enjoy working in Indian country and happy to be here and talk to you a little bit more about NAB and what we do. So a little bit about our background. So we are a Native owned bank. We were established in 2001. And one of the kind of primary founders of the bank was the late Eloise Cobell. We originated out of Blackfeet territory up in Browning, Montana. And so that's where we still have a full service bank located on the reservation there. As of to the end of last year, we have over 288 million in total assets. So we're kind of a smaller size bank, but because of the different programs that we utilize and the government guarantees, we're able to take on much larger projects than maybe other banks of our size. We do have a Native staff and Native leadership at our bank. And then we, as I mentioned, are headquartered in Denver, but we have retail branches in Denver at our headquarters. This is a photo actually of our headquarters in Denver. We're just south of downtown. And then we have our full service branch location on the Blackfeet Reservation. And late last year, we actually just opened a new office in Issaquah, Washington. So really making a presence in the Pacific Northwest to help service that community as well. So if you go to the next page, as I mentioned, we are Native owned. So we have 37 shareholders, 31 of which are tribes, tribal enterprises, or Alaska Native corporations. So you'll see this map here just lists all of our shareholders along with locations of where they are on the map. We do have non-tribal shareholders, and those are really institutions and organizations that support the mission of the bank and what we do. And so really happy to have their support as well. And if you go to the next page, I'll just wrap it up by giving a little bit of a breakdown of where our commercial lending falls across the country. So we are a nationally certified bank. We're federally regulated. And so on the commercial lending side, we're able to offer loans across the country. As you'll see, we'll have loans all the way in Alaska down to Florida and pretty much everywhere in between. And you'll also realize like a lot of our concentration is where there are tribal populations and tribes located. On the commercial lending side, over 95% of our portfolio is really lending into Indian country. It's the mission and the focus of the bank. It's what we were created for. That was Eloise's dream and vision. And so feel really proud and happy that we're able to perform and keep her vision alive. So that's a little bit about the bank, and happy to talk with everyone going forward and tell you more about what we do. Thank you.
Thank you, Ms. Lane. Thank you, Ms. Lane. Mr. Fernando Ponce, the virtual floor is yours.
Yes, thank you. Good morning. Appreciate the opportunity to be here today. Fernando Ponce with Primary Funding. So we're an alternative lending company. We are based in San Diego, California. We've been around for about, almost 28 years now. It's a family-owned shop. I'm not part of the family. I just work for the company, but it's a great organization that really works with banks primarily. I myself was in banking for about 11 years, actually. Worked for a big bank, worked for Chase Bank, and did commercial finance there. And then about 6 years ago, decided I wanted to come to a smaller company and really work with smaller businesses. And with the big bank, Chase was great. I enjoyed my time there, but with Primary Funding, I'm really able to say yes to many of the clients that I was unable to help at Chase Bank, right? So it's a great opportunity for me. I really enjoy working with small businesses. We tend to focus on accounts receivables and asset-based lending. That's really where our strength lies. But we love working with companies and really try to get them back to the bank. That's kind of our whole goal, is that we are going to work with you. We're going to be a bridge. We're going to help you, put things in place that are going to make you bankable at some point. So that's really the way we position ourselves. So what makes us different? We are a direct lender, so we do have our own capital. We can lend all around the country. Again, we're a small company, so we do have decision makers in-house. We're very flexible in that we try to structure the facility to really match what is happening with the business now, right? As opposed to what's gone on historically. And so our ability to scale and be flexible in that respect is great. And then we really are relationship based. So as we get more comfortable with the borrowers, we really try to continue to custom and tailor those products to really fit what makes the most sense for them, as opposed to trying to fit them into just what we can do. And then again, we do provide account managers. That goes back to our relationship building piece. And we really, in our space, we tend to run into a lot of issues. Unfortunately, when borrowers come to us, many times they've been declined several times and, are looking for options. And so we really try to come and figure out what is the best way to mitigate, issues and find a solution ultimately. So, our ability to problem solve, I think, is fantastic. But really, again, excited to be on the panel here today.
Thank you, Mr. Ponce. Ms. Nicole Johnny, the virtual floor is yours. And you are on mute.
Oh, yeah, it's a bene Shea Nicole Johnny Nishia, Kia Ani Nishlando, Kia Ani Nishlando, Lajana Bashichin, Tkabahan Dashiche, Auto Nashashadana Edashanale. Hello, good morning, everyone. My name is Nicole Johnny, and I work with Raven Indigenous Capital Partners. I'm an investment associate there, and at Raven, we do some really cool things that I'll share with you guys a little bit later. But a little bit about myself: I grew up in the community of Crystal, New Mexico, so a little bit more north of where Veronica's from on the Navajo Nation, just further up in the Cheskas. Have an MBA in finance and undergraduate degrees in finance and economics. Prior to my work with Raven, I worked with REDW in doing business valuations for mergers and acquisitions. I've worked in the bond markets with RBC Capital Markets, and I've even had the opportunity to work with the Navajo Nation itself with portfolio management. So it's been a really exciting tenor, and I'm excited to share with you a little bit more about what we do at Raven. Next slide.
Okay, purpose and vision. Okay.
Yes. So at Raven, who are we? What do we do, right? So Raven, we're one of North America's first and only so far, and hope we're not the only ones there, of being an Indigenous-led and owned impact investment firm. Raven was started in Vancouver, north of the border, but as we're growing the team and as we're growing out, know, it really is understanding that we provide multi-stage capital to just innovative and scalable and purpose-driven Native-owned businesses across the US and Canada. And really what we do is we provide equity-backed financing to Native-owned businesses. Because when you talk about venture capital, less than 0.02% of total venture capital goes to Native entrepreneurs. And so, you know, we just really wanted to be in this space to really provide this accelerated type of capital to Native entrepreneurs, you know, exploring of what venture capital is, about how can you scale and build and grow. We also understand too that with venture cap, you know, it's a very specific and niche type of capital available, but that's also why we're here today, to kind of talk about the differences of what we provide and, you know, what we're looking for as well too. But, you know, at Raven, we believe in the cultural and creative economic capital of Indigenous people is just really critical to helping create a sustainable economy. And so with myself at the Raven team, we're definitely a team of non-Indigenous and Indigenous folks all committed to, you know, the well-being of Indigenous people. On the US side, it's myself and colleague Gary, and also Althea. She also comes over and assists us and helps us with our work at Raven. But, you know, across the board, our team is primarily in Canada, but, you know, we're all here supporting the same efforts.
Thank you, Ms. Johnny. Thank you, Ms. Johnny. Mr. Lee, the virtual floor is yours.
Okay, good morning and good afternoon, everyone. So Bank of America is a leading financial institution serving individual consumers, small and middle market businesses, and large corporations with a full range of banking, investing, asset management, and other financial and risk management products and services. The company serves approximately 69 million consumers and small business clients with approximately 3,800 retail financial centers, 15,000 ATMs, and award-winning digital banking with approximately 57 million verified digital users. The company serves clients through operations across the United States, territories, and more than 35 countries. Further, Bank of America is the nation's top small business lender with a total loan portfolio of $43 billion at year-end 23. The bank provides advice, solutions, access to capital, and dedicated support to meet the needs of 11 million business owner clients. Also, Bank of America has supported CDFIs for more than 25 years and is the largest private investor in them, with $2 billion in loans, deposits, capital grants, and equity investments through more than 250 CDFI partners. I'll add a quick announcement at the end of my presentation related to this effort. My name is Nate Lee, and I am Dene, a Navajo tribal member, originally from Fort Defiance, Arizona. For some of my family members and folks out there from my community, Nate Lee Yanesha, Kohana Nishne, Totsani Bashichin, Kiani Shanale, Tachi Nishinche. So I've spent the last 18 years in the commercial banking sector working at institutions that include BOK Financial, Rabobank, Wells Fargo, and MetLife Investments. I have a bachelor's degree in finance and a master's in ag economics. And I'm also a proud recipient of the respected Chitme Elito Scholarship and a Native Forward Fellowship. I'm active in the Albuquerque community as a volunteer for Junior Achievement of New Mexico. And I'm also a board member for Explora Children's Museum and the American Indian Chamber of Commerce of New Mexico. Back to you, Russ.
Excellent. Thank you, Mr. Lee. Thank you, Mr. Lee. Next, I would like to begin this portion of our webinar series with Ms. Veronica Lane by asking Ms. Lane this question. What makes Native American Bank different from other banks?
Perfect. Thank you. Thank you for that question. I think one of the primary differences of our bank is we're really targeted and focused on fulfilling the mission of the bank. It's very specific in that we're wanting to help serve Indian country and be a resource for Indian country. So along those lines, it really means understanding sort of the challenges that Native-owned businesses face, whether they're on trust land, off trust land, you know, who their clienteles are, really understanding those unique nuances and being willing to be very flexible and understanding, while also making sure that we adhere to our federal guidelines because we are federally regulated. So it's a really like a niche area of the bank of where we operate in, and we really hope to be a resource for our clients to help problem solve and get projects done that maybe otherwise wouldn't happen. On the flip side of that, we are actually the normal bank, just like a normal depository institution. So we do offer banking products on the personal side and the commercial side. A lot of our customers right now, I would say, are, you know, from the Browning market and the Browning area, just because we have a full service branch there. And then we also have customers in the Denver area, and hopefully we'll grow that into the Pacific Northwest, Seattle, Issaquah area as we open our branches there. So we offer just everyday normal checking accounts on the personal side, as long with the deposit account, CDs. We have, you know, a mobile banking platform along with an application. You can do remote deposits. We have online e-banking services. So we offer all of the products that you could probably receive at a lot of institutions, and then also have products for commercial loans as well. One of the primary areas that we focus on is working in the commercial lending space. It's probably one of the largest areas of our bank where we are primarily a commercial lender. I would say after that, we're probably a depository institution, and we generate a lot of social depositors, which helps, you know, our balance sheet and helps us fulfill the mission of the bank. But on the commercial lending side, we do financing for commercial borrowers, whether they are businesses or tribes or tribal enterprises or Alaska Native corporations. We have a pretty wide range, I feel like, for our loans. To us, a minimum or a small business loan is at a minimum of 100,000. So we don't really operate in the micro lending space, unfortunately. But then we can go up to, we don't really like to put a cap on how large we can go, but if I had to give a number, I would say probably about up to $40 million for a project. We finance various types of business entities. We do a lot of pretty much every commercial loan that you could probably need. I would say the one thing I know we don't really do is letters of credit. Those are very rare and not something that we entertain very often. But we do term loans, revolving lines of credit, construction to permanent financing, and then permanent working capital loans. So we offer a wide variety of options for you know, small business needs and just even large scale business needs. Our application checklist is very standard and straightforward. I feel like it's very typical to what you'd have go through when applying for a loan from any type of bank. We'll need a business plan, which would include projections. That's, I feel like, one of the areas where we run into a little bit of an initial, maybe a little hiccup or bump when we're talking to small business owners, is really making sure they understand that they have that ready and prepared when they're going to apply for a loan. We do run credit reports or credit checks on the anyone who owns 20% or more of a business. And then we'll ask for historical financial statements and historical tax returns for the business owners as well. So really happy to talk more about how we utilize our commercial loans and the government guarantee program later in this presentation. And then we also do cannabis banking. So this is something that we have recently deployed over the last year. We really focus on the Native organizations that do have cannabis operations on the reservation. So we do offer checking accounts and deposit accounts to those companies. It's a very regulated, very strict application process to open accounts with us. The one thing I will clarify for cannabis banking is we do not do lending to cannabis or any cannabis related entity. But if you know of anyone who's looking for depository services, definitely feel free to reach out to us and I can connect you with our cannabis team. So generally, those are some of the services that we offer, and happy to go into more detail when we get to the questions.
Thank you, Miss Lane. Thank you, Miss Lane. Mr. Fernando Ponce, please share with our audience your products, services, lending programs, and how organizations can utilize these funds.
Oh, I'm happy to. Thanks again. So we're an asset-based lender, as I mentioned in the introduction. Our bread and butter really is we started about 28 years ago was really as a factoring company. So if you're not familiar with factoring, it's essentially a process by where we are purchasing invoices at a discount, right? And so works very much like a line of credit, but we're going in if you provide a product or a service and you are then invoicing and you're waiting for 30, 60, or 90 days to be paid on that service, have accounts receivable. And so those invoices, we can actually go in and we can finance them, give you cash up front, and then we just take a percentage of the invoice when it gets paid. So that's kind of our main product, and everything else that we do stems off of that. So the purchase order financing is a little bit more on the front end. So you get a purchase order on the front end from a client, and you are then going in and having to finance the production of that product so we can pay for your cost of goods on the front end. And then the asset-based lines of credit, we really can, that's really for a borrower that's a little bit more established, maybe has a little bit stronger set of financials. Maybe they're very close to being bankable, but not quite there, right? And we can put together an asset-based line where we're actually using a formula by which we dictate how much you can borrow month over month whenever that is submitted. And then the bridge loans, that's going to go again along with our factoring, right? So if we have a factoring program in place, we can sometimes provide a bridge loan for a certain percentage of what the factor volume is, and then that's repaid through your reserve accounts as we factor through your invoices every month. And then lastly, the brokering. This is something we've started doing, really kind of coming out of COVID. We found a need for this particular service. So it tends to really be more specific to real estate. And we tend to do quite a bit of hard money, private capital, but we do a lot of SBA as well. And then us being in California, we do a lot of what's called California Southern Guarantee Program loans that are very similar to the SBA, work very similarly as far as the guarantee goes. But they're, it's the guarantee is provided by the state of California, and you have to be doing business in California to qualify for that particular program. So that's really the products that we provide. A lot of flexibility in what you can use this for. I mean, it's really meant to bridge the gap in when you're getting paid to your operating expenses, right? So we're going to, allow you to cover payroll, pay your vendors. In some cases, you land a new contract, you have to ramp up and hire employees, and we're able to finance, kind of that front end cost through contract financing. The marketing and advertising. So really, I mean, just think of any overhead that you have, and particularly tends to work better for payments that you have on a reoccurring basis, right? So your fixed cost is where it's really going to help you, and it's really just intended to bridge that gap and allow you to speed up your cash flow process so you can get your hands on that capital and cover all of this monthly overhead without skipping a beat.
Excellent, Mr. Ponce. I appreciate that very much. Miss Nicole Johnny, we are happy that you could join us today. Can you please explain what venture capital investing is, how VC funding works, and who Raven Capital funds?
Absolutely. Thanks for that question. So, oftentimes when we start talking with entrepreneurs, the first introduction is like, we provide venture capital, we provide equity-backed financing. And oftentimes people are like, okay, can you break that down? So like equity-backed financing is just truly at the most basic understanding is like, in exchange for money that we give you, we get a little bit of ownership of your business, and typically with venture cap, you can go to the next slide. This type of financing is one that's a little bit more on the long-term end. Venture capital is just, primarily used in like the pre-seed, seed, so like the early business development round, all the way to the Series A and Series B type of businesses that are really poised to have accelerated growth, and so part of this of what we do at Raven is we offer this type of capital to early stage native owned businesses that have both an impact and social, like that they're commercially sound, they have the commercial impact on it, but also having a social impact as well too. And so, you know, when we're looking at who Raven funds, when we're looking at what type of businesses really kind of works with our investment thesis and what we're looking at, you know, we definitely look at revenue growth, we look at scalability, we looked at geography. So anyone who has native-owned businesses in Canada and the US, and really we say that we're sector agnostic. So we look at all types of companies. We're not just focused in on one specific area. There are certain venture funds out there that, you know, might only target like deep tech or healthcare or consumer goods, you know, but with Raven, we look at all of them. And so on this slide, you'll see a little bit of some of the investments that Raven has made so far. And just a little bit of background too, is that so Raven right now, we're currently working out of our second fund of $80 million. That's US, so that's 100 million CAD roughly. We've made 19 investments so far across 3 different funds, but right now I'm working with the second fund that we have in deploying capital. And so some of our investments, the most recent one is Kismet Health, Tribal Diagnostics, you know, and NoHo Home. Those are the most recent investments that Raven has made.
Beautiful. Thank you for sharing, Nicole. Thank you for sharing. Mr. Nate Lee, as we were preparing for our webinar, you mentioned that Bank of America promotes better money habits through your products and services. Please expand.
Well, certainly, and thank you, Russell. So on our website, you can find Better Money Habits, which is a free financial education platform for people from all walks of life to get practical, easy to understand knowledge about money. With hundreds of engaging videos, articles, and resources, anyone can find the right tools and information for their situation, including small business, with topics like budgeting, saving, retirement planning, owning a home, and more. The platform helps put your know-how to use so that you can make smarter, more confident financial decisions. And as I mentioned quickly earlier, I have a little announcement I'll make later in the presentation. Next slide, please. So one of those financial decisions is how to access credit. Excuse me. For the small business customer, we offer a variety of financing options to purchase inventory, materials, refinance debt, or finance accounts receivables. So above here on the slideshow, you'll see 3 of our most popular loan products for small businesses. Most of Bank of America financing requires ownership for at least 2 years, $100,000 in annual revenue, and a minimum personal credit score. And you see that there in the qualifications section of each of those 3 products. But we do have a secured line of credit option shown here in the center of the slide, with a minimum 6 months in business requirement, $50,000 in annualized revenue, and a $1,000 security deposit. This option is helpful for startup businesses and beginning entrepreneurs. Next slide, please. Okay, and we have other financing options as your business continues to expand and grow. These include real estate loans, equipment loans, lines of credit, as well as specialty loans, including SBA loans. As you can see in the qualification sections above, the minimum requirements include 2 years in business and $250,000 in annual revenue, with varying security options based on your choice of collateral. So again, as your business revenues continues to blossom and you generate stabilized cash flow and you obtain resources that can be collateralized, your financing options expand greatly. Thanks, Russ.
Thank you, Mr. Lee. Thank you, Mr. Lee. The next section, I want to discuss our strategies. And I just also wanted to just let everybody know who's attending. Please start developing your questions and answers. And at the very end of this webinar, we will read out your questions to our panelists. So strategies. Every business needs a strategy to outline the shared goals of their organization. Building specific strategies is an absolute necessity to increase the odds of success. Without one, organizations can lack direction, efficiency, and profitability. I would like to begin this portion of our webinar series with Mr. Fernando Ponce. Mr. Ponce, what does it take for a client to get funded with your organization, i.e. credit score, years in business, collateral, business plan, money in the bank, and other requirements?
Great question. So really, for us, it's really about what's happening now with the company, right? So what we really focus on is the asset and where the company is now. Personal credit really does not affect our decision. Time in business really doesn't affect our decision. It's really the quality of the asset. So who you're doing business with. Are you in a B2B industry? Do you have accounts receivable? That's kind of where it starts for us. If you're selling to larger companies or government entities, that's usually going to be a far easier path for us. If you tend to sell to smaller, kind of mom and pop businesses, maybe independent restaurants, the local surf shop, something like that, right? Being here in San Diego, we get a lot of that. That's going to be a little bit tougher for us because we really don't have a way to do any due diligence on those clients of yours and establish what their credit worthiness is. So ultimately for us, when we're financing the receivables, we want to know what the credit worthiness is of the customers that you're selling to. So that's going to be the key for us ultimately. Again, time in business, credit score, not really going to have a bearing. I mean, if you're going through a bankruptcy right now at the moment, we'd have to wait until you'd completed that process. I mean, that's kind of the only scenario that I could see where your personal credit, could affect our ability to lend. And then industry wise, I mean, any B2B industry typically works pretty well, with the exception of like construction is really tough for us. And also healthcare is a difficult one for us. But for the most part, if you're in a B2B industry, you're, getting paid on 30, 60, 90-day terms, and you're doing business with clients that we can go in and vet and we can figure out what the credit worthiness is, and it's strong enough to support the current need, then we're kind of off to the races there.
Excellent. I do have a follow-up question. What types of business do you fund and don't fund?
We're pretty agnostic. Again, as long as as long as it's B2B. So if you're in retail, unfortunately, we're not going to be a great fit. So if you're have a retail shop or a restaurant or something like that, it's going to be very difficult for us to do anything. But if you're in a B2B industry, as long as it's not construction or healthcare, we're pretty good. Now, when it comes to receivables and PO financing and factoring, we have done quite a bit of asset-based lending on the real estate side. And so what we have had where we've had some people in the construction industry or on the retail side that have had, for example, we have a lot of clients that have good real estate assets right now. They have a good equity position. We do have products that we can sometimes position a line of credit on that equity. But again, that's a very specific scenario. For the most part, B2B industry, accounts receivable, that's where we're going to have the best path forward.
Beautiful. Thank you. Thank you, Mr. Ponce. Thank you, Mr. Ponce. Mr. Lee, when organizations or small business owners are preparing to meet with you and Bank of America, what type of documents, business and personal information should you have in place?
Yes, thanks, Russ. So the type of documents and information you should have ready is important. So any potential lender will want to know details about your business. So your business plan is an important document for lenders to review because it can show that you have a well thought out strategy. Also, your personal credit can impact your business, whether your business can borrow money as well as how much you can receive. So the first step in borrowing is to make sure your personal debt is in order. Request your credit score, and if necessary, take steps to improve it before approaching a lender. It's important to fully understand why you might need to borrow money for your business. Use your budget and financial statements to help you understand what you're spending money on and what your future financial needs will be. So at Bank of America, In general, we ask for 2 years business tax returns and 3 years if it's an SBA loan over $1 million. Next, we will need 2 years of personal tax returns. Also, a personal financial statement from all owners and non-owner guarantors of the request. Also, we will need a business debt schedule for the business. And lastly, additional documentation may be needed depending on the situation or the loan. For example, your current accounts receivables and accounts payable aging reports might be necessary for a line of credit request. One quick item in the previous slide, I mentioned better money habits. And as part of our overall financial literacy efforts, I wanted to just announce a platform. And actually, I'll talk about this one a little bit later at the end of my presentation. But that's what I wanted to chime in on when it comes to documents. Russ, thank you.
Thank you, Nate. Thank you, Nate. Next, Miss Nicole Johnny. What qualities and targets do you look for in the founders of companies you invest in at Raven Indigenous Capital?
So definitely with what we look for at Raven, we definitely are, like I said, sector agnostic. So we'll look at all types of different businesses across the spectrum. But really, some of the areas that we do have a lot of deep expertise in, and those that do really catch our eye are things that are in healthcare. We're looking at SaaS, digital media, fintech type of businesses, climate and renewable energy, natural products, businesses that align with food sovereignty, because we really do think like these are the areas that can really accelerate and propel, the well-being of Indigenous people, because that is like our investment thesis. And so when we're looking at these businesses, we don't just look at what services and products that they offer and that they provide, but we're also looking at the team composition, because a lot of these different businesses that we're looking at are they're on the smaller end, and it takes a lot of collaboration amongst different types of capital, whether it's like going through accelerators and having grants, and then maybe taking out a few small loans to get the business right where it's like at that ledge of where you're just ready to go and like take a jump with like doing an investment and talking to investors there. So really it's like, we look at all different types of different facets of the business, but primarily it's like, we really want to see a strong team. We want to see, growth in revenue, in product. We want to see scalability and part of that as well too. Because what's really unique is that as you're hearing all of our other capital providers talk with venture cap, with the type of capital we provide, we don't actually really look at credit score, because we're taking ownership of the business as well. So it's like, we're going to ask for financials and business plans as well too, but credit score is not necessarily one that is a hindrance for us to look at, because again, we're looking at building a long-term, like anywhere from 5 to 7, 8, 9 year relationship with a funder or with an investee, and we're looking to really, walk beside you and help you grow your business as well too, because that's really what an investor is when you're bringing them in onto your company as well.
And I do have a follow-up question, Nicole. Once your team has determined a best fit for a candidate for investment, what are the next steps Raven takes during the investment process?
Absolutely. So sometimes what we look when we start going down the process of due diligence for Raven, you can get to the next slide. So we have our incoming lead. We have just, a quick 30, 45-minute introduction call. Really, it's just wanting to learn more about you and your business. And, we'll talk about, who are the founders of this business? What is the impact of the business, background of it, and the current performance. And then after that, we start kind of kicking off the commercial component, the commercial screen of our due diligence there. So, at this point, after our conversation circling back, we might, start asking again for more information such as the financials, looking at your sales pipeline, looking at your market data, looking at your strategies of, of growth, really, of product and into services as well too. Then we start kind of also taking a quick glance again at the environmental, social governance factors of the business there too. And then part of our screening also is an impact screen, which is very unique in venture cap. Some impact investors, like, you don't really do an impact screen, but we do. We think it's important. So for us, we have the commercial screen of doing the commercial due diligence, and then we do the impact screen as well. And really the impact screen, it's a 90-minute call workshop with the founders and someone from the commercial side, and then you meet with our impact team, and it's really talking about what is spurring you to do your business and why does it benefit Indigenous communities. So those are the two gates of the screens that we do have at Raven. And then after that, it's kind of doing a little bit more of the field due diligence. And so here at this component, we're going to ask for a little bit more deeper level. We're going to start of information. We're going to start looking at market and industry information. We're going to start, circulating and developing what might be the best investment terms. Do we want to use safe C notes? What's the most appropriate way of funding this business? And after we're done with this, we present this to our investment committee for an investment consideration. And then step 4. And then step 4 is really closing the deal. It's all of the legal paperwork, it's signing, it's wiring the funds, it's finalizing the value creation plan that we'll create with you. It's, coordinating times to work with our impact team workshops. And really it's this time where we get to celebrate and, welcome a new company into the full Raven team. And of course, part of it too is as an ongoing investment of Raven, we really want to bring together our network and the support that we have within our team to really help grow your business. And so oftentimes, what we do every year is we have a CEO founders retreat. So all of our CEOs of our portfolio companies, we come together, we help build that and nurture this community of Native CEOs who are building businesses and growing and scaling. And, we're really wanting to provide that growth and that community for businesses as well. And also too, part of our value creation after an investment is, really helping you get into new markets, whether it's your, leadership growth, whether it's helping you with your next raise, because we might come in at, you're at a pre-seed raise and then now you're going to do a seed raise. And so it's really helping you put this together, helping you develop network and support in that manner as well too.
Beautiful. Thank you for sharing that process, Nicole. Thank you very much. I know we'll have more questions about that down the line. Veronica, I know that Native American Bank prides itself on strategic partnerships. Please explain how important it is for small businesses to build partnerships and share who Native American Bank currently works with and impacts.
Perfect. Yeah, thank you. I can definitely talk to that, Russ. So at NAB, we fund startup companies to companies that have been, operating for several years. So we really run the gamut on the type of business loans or commercial loans that we'll entertain. So we really have to make sure that we also have a lot of strategic partnerships. One, working with Native-owned CDFIs for maybe some of the smaller loans that we can't entertain, so that for us, we always want to make sure that if it's something that we know is not a product that we can offer, that we really build relationships and partnerships in our communities to give resources. And then it's also on the flip side too, is really other ways that we partner with Native CDFIs is, let's say if we have a loan in a certain area like Oklahoma, and we know of a Native CDFI there, Citizens Potawatomi, and we, actively reach out to them asking if they want to participate in our partnership or in our loan as a participation, just because we also want to make sure that we're taking a holistic view throughout Indian country, especially with financial institutions that serve Indian country, so that they can also, have those types of loans on their books. If it's maybe a new loan that they've never entertained before, We've been doing a lot of healthcare financing over the last few years. So that's something where I think a lot of different entities are looking to see how they can enter that arena. And we have built quite the knowledge base and expertise on how to structure those types of loans. So we're really open to having those types of discussions. And it's also on the other flip side where we go out and participate in loans in, other loans that are led by different organizations and different banks. We do that right now with low income housing tax credit loans, where we'll go in as a participant. Primarily that has been happening here in the Denver area. So where we're really passionate about obviously creating homes and home ownership. And this one is a little bit of a unique situation where we are participating in permanent supportive housing for the unhoused community in the local area. So it really is such a wide array of different partnerships that we've built. One of the primary examples I can talk about right now is actually with Raven. We've partnered with them on a current loan where they had an investee apply for a current line of credit with Native American Bank. And we were able to close that loan last month to provide those resources to the small business owner who is currently looking towards growth, and really working in partnership with Raven to understand how their investment in the company works and how that would impact our loan, and really having those types of conversations. I mean, we had a really great kickoff meeting with them to really understand how their investment in this company worked and understanding how that was going to impact our underwriting, really understanding that that equity investment would really not impact our loan and the collateral that we were taking on the loan. So it was a really open dialogue and positive partnership. So really a fan of building those types of relationships, and we're hoping to do that on such a wide variety, like a wide range of basis too, whether it's even with professionals and consultants. We have accountants and CPAs and tax accountants, auditors who work throughout Indian country, and really helping to build those types of partnerships so that they know we can be a resource for their clients as well.
Collaborate, collaborate. Oh yeah.
So for us, when I talk about our partnerships and why we do the work that we do, I think it's a little bit unique in sort of the banking realm to think about that. But for us, it's really knowing and understanding that there's a lot of challenges and potential barriers in our community. And the only way that we're going to help support economic development and self-sufficiency is through these partnerships. So I just wanted to quickly highlight some of our impact with the capital that we've been able to deploy directly to Native communities, Native-owned businesses, some of the capital that's been invested directly on reservation projects, because we all know that's a challenge when we're taking a look at collateral. And then we have quite a very high percentage of every dollar that's deposited at our bank that gets redeployed and reinvested into the community. So that really helps us too when we're talking about social depositors and why you should deposit at a Native institution, is a majority of those funds really go back into helping us do the work that we do. And I think, that's a well-known fact right now is any money you deposit in a bank, it helps them deploy and really reinvest in the types of loans that they provide to their communities. So yeah, I think that really highlights just sort of our strategic plan and what our impact is because of the work that we're able to do.
Beautiful, beautiful. Again, I love that word collaboration, developing resource partner. It is critical and important as small business owners and resource partners to get out there, make that effort, develop that relationship, and make it last. So I appreciate that, Miss Lane. Miss Lane. Next, successes and how to avoid failures. One cannot have success without failures. I would like to begin this portion with Mr. Nate Lee. Mr. Lee, can you please tell our audience the common mistakes small business owners make and tips to avoid them?
Yeah, certainly. Thanks, Russell. So you see here on the little fine print there, this information was sourced from a study from the National Federation of Independent Businesses. So it's really great information, and I think we can all relate to this information. So let's go to the next slide, please. So one big reason a small business might fail is because the entrepreneur does not take the time to plan and assumes his or her passion will lead to success. To be an effective small business owner, you need to take the time to inventory your personal and financial states. So here are some tips, listed here on the right. Number one, just self-reflect, to see if you're ready personally and professionally to take the leap. Second, don't skimp on writing a comprehensive business plan. It's just an essential part of your planning. And lastly, plan for slowdowns. They do happen. So next slide, please. So small businesses can fail because the owner didn't research. So some tips. First, just know your industry and understand the trends that are occurring within your industry. This is what a lot of underwriting is based on when it comes to recognizing what a business is doing and where it's headed. The trends are very key to understanding. Secondly, look into your competition. What are they offering and at what price? What's working for them and what are their challenges? And third, do more than just a Google search. Talk to people as well. You might consider buying some data from a reliable source as well. If your business is large enough and you have the NAICS code, you can also buy some research data from like RMA, which will provide you industry statistics on what your business should look like. Like, for example, in your business, what is the gross margin on average in your industry? What is the bottom line net income in your industry? And that's what you could set your goals to pursuing. Next slide, please. Okay, so many entrepreneurs feel that they need to go it alone. This is one of the biggest missteps you can make. So some tips. Number one, build an advisory board. It's really important to get some knowledgeable people to assist you and work with you in your business. Second, join some kind of a social media community related to your business. Again, it's just important to understand what's happening in the wider space of your business. And third, maintain contact with your network. You might build a network in your local chamber of commerce or your national chamber of commerce as well. So definitely build your network. Don't be afraid to speak and talk. Be informed. And lastly, just seek out online support. Let's go to the next slide. Okay, so entrepreneurs need to know their numbers and they must regularly check on the health of their business. So reviewing financial statements such as your income forecast, balance sheets, and cash flow projections should be a regular business activity, a habit. It just should become a habit. So here's just some tips about avoiding the insufficient funds problem. Number one, just overestimate your expenses. Be conservative about your numbers when it comes to expenses. Secondly, automate savings. Just make it a regular function in your budget to just include a savings line item in there. Thirdly, take advantage of free checking accounts. Search around. Don't be afraid. Don't just go to one source if you don't have to. And lastly, make quarterly tax payments. Believe me, this one catches so many people. It's amazing. Even when my dad had a small business, and this is one of the things he always had me doing, when I was in high school, making those quarterly tax payments. It was so critical to avoid failure. Next slide. Okay, so loan mistakes. If you need to borrow money for your business, make sure you understand what interest and fees you will be charged and budget for them accordingly. So some tips, just make sure you understand the loan fees and the interest charges and include them in the budget. They should be part of those expense items that you budget for. Secondly, maintain good credit. There's so much we could talk about credit, from a personal level to a business level. And there are business credit reports out there. It's not just like your personal credit that's being monitored. Your business credit is also being monitored. Third, don't overborrow. Make sure to understand what you're looking for, how much you need, and why you're needing it. So, just to avoid from overborrowing. And last, ask your advisory board for advice. Again, when you have some professionals there helping you out on your advisory board, it will really help you from avoid making big mistakes, especially if some of them already had experience getting loans, accessing loans. They probably, if they're former business people, they probably have run the gamut of every kind of loan there is out there, and they know the fees, they understand the amortization schedules, they all understand all these things that most of us don't understand. So lean on your advisory board. Next slide. Okay, so losing focus on cash flow. Cash flow isn't how much you make or how much you're worth. It's how much cash is coming in and when and how easily accessible it is. So small businesses have a constant inflow and outflow of money, and entrepreneurs need to understand how much money they have available at any given time. If your cash on hand won't cover your bills, you have a cash flow problem. So here are just some tips very quickly. Stay on top of your record keeping. Again, keep that budget. Don't be afraid to put together a budget outlining your revenues and your expenses. Manage those expenses as they come in. Don't slack off on that. Thirdly, review your debt and loan repayment strategy and look for savings where they are. Like paying in advance, you can help reduce any kind of additional interest expense by paying a loan early. And lastly, I just note that ensure you're not overpaying your taxes or paying duplicate coverage on insurance. You'll be surprised how many insurance items actually overlap. So just keep an eye on that. Next slide. I think there's another slide.
Yeah.
Oh, I'm sorry. That was it. Thank you, Russell.
Wow, Mr. Lee, that was some excellent advice, excellent tips. I definitely going to rewatch this again, but thank you, Mr. Lee. Next, Mr. Fernando Ponce. As we were preparing for today's webinar, you brought to our attention a successful case study on a fitness equipment manufacturer. Please share and expand with our audience.
Well, happy to, Russell. Thank you. So we, as I mentioned earlier, we work with a lot of banks. The reason we work with banks is because we tend to get most of our business from them. So it comes in one of two ways typically. So either they have a client that they're trying to help and they decline, and then they bring us in to hopefully provide some financing, or in this case, they're already providing financing for a customer. So this fitness equipment manufacturer actually already had an asset-based line of credit with their existing bank. They ran into some trouble. They had some issues with tax liens, and this actually really came. Nate mentioned something about making those quarterly tax payments, right? And they had some huge sales during COVID, right? Everybody was trying to build out their home gym, and unfortunately, they had some issues with the tax nexuses, and they built up a pretty large tax liability. And because of that, their bank was no longer able to provide that line of credit for them. So we were able to come in, very quickly, because it was coming up on, this was in the last quarter here, come in and provide a working capital line of credit for them to actually ramp up their inventory and get everything put together for like Black Friday sales and getting everything going for that. So huge success. We were able to pull it together, get them set up, and they didn't skip a beat. They were able to get all the inventory they needed and hit those Black Friday numbers. So again, this was just another scenario where a relationship we had with a banker. They had a client that they could no longer help, and then we were able to come in and provide that bridge. So we're still helping them now, and they're in the process of getting a larger ABL facility that they can pay us off with. That'll be a better fit for them long term. But for the time being, we're going to be that bridge and really help them to facilitate those transactions while they continue to grow.
Beautiful. And there's that word again, partnerships, relationships, partnerships. Love to hear that word. Thank you, Fernando. Miss Nicole Johnny, can you describe a particularly successful investment you made and what made it successful?
Absolutely. Thanks for that. So one of the most, I think, not just successful, but exciting. I mean, all the investments we make at Raven are pretty exciting, and we're really helping them in their value creation so that they can be successful. But one of these that just stand out to me so much is Kismet Health. And so Kismet Health is a Native woman owned and co-founded company. It's definitely a really unique parameter of what they're doing there, because basically they're building the pediatric telehealth service platform to really provide mental health services for children, and it really is our first investment into telemedicine, into the whole telemedicine space for us. And so when we looked at Kismet, what really stood out to us was a strong product development, that they had a great team, that the co-founders there, Dr. Sierra Gramoff, who's Alaska Native, she has the experience of, by trade, prior to her, starting Kismet, she was a child clinical psychologist. Her co-founder, Christy, her COO, Christy, has a strong background in operations and in building companies and building product. And so when we're talking about what do we look for? So we look for really great co-founder teams. We look at the leadership skills that they have. We look at technical expertise and background, because building a business from scratch is hard, regardless if you go for venture capital, whether if you do starting out something that starts as a passion and wanting to build a business around it, it's hard. So you have to surround yourself by the right team members here. So Kismet had a really good team member there. They were really thorough. I know Nate outlined it as well too, of your business plan. For us, it's we ask about, your go-to-market strategy. What is your product development strategy? How are you going to grow your revenue? And so really picking those apart. What is the market size? Do we think that you guys can really have a good share of market size? We look at all of these factors. We look at what's been built. We look at the financials and make sure, again, that it's commercially sound, and we do our impact screen. And Kismet just kind of really checked off all those boxes for us at Raven, and we decided to do an investment in them.
Beautiful. Thank you for sharing that. And I know that we will probably have follow-up questions, whether it be at the end of this presentation or as a follow-up in the future. So thank you, and congratulations to Kismet Health. Next section, government contracting. Big government contracting, funding for government contracting. I would like to begin this webinar series with Mr. Fernando Ponce. After interviewing you in preparation for a webinar, you provided me a government contractor case study. Can you please share your experience and the program companies can utilize?
Again, happy to. So we actually had a security contractor who got a large municipal contract. He'd been in business for years. He's doing somewhere around $300,000 or so in annual revenue. I think he was around for 11 years prior to this, and then he landed a huge contract that pumped him up and 10x his revenue to around $3 million a year. It's a long contract too. It's a 3-year contract, and so he had to go on a hiring spree really, and hire guards, buy the uniforms. These were armed guards as well, so they had to have some knowledge and some certifications and background behind them. So they were well-paying jobs. And so he really just had nowhere to go. Unfortunately, his bank wasn't able to help him, not because he wasn't creditworthy, but it was just because historically his revenues were not there, and he really needed to ramp up significantly and really leverage as much capital as he could to get this contract going. And so, we vetted it out. We saw what the opportunity was, and we were able to provide that facility in place. And what was really great about this one actually is we started him off with a line of credit. It was around 350,000. He quickly outgrew it. And we actually had to transition him over to a factoring facility that allowed us a little bit more runway. And I think now he's up to almost $1 million in receivables financing that he's doing on a monthly basis. So, great story here. Really happy we were able to help him. And again, the quality of who he was doing business with, this municipal entity, just really allowed us to give him that additional capital that he needed because the contract was strong. And just as a shout out as well, Russell, I know you recently referred us somebody that's on the government contracting side, and
Yes.
looks like we're going to be able to help her, just waiting for her contract to get approved. And once that's done, we should be able to put something in place for her as well to really help her scale and take on additional work. So that was a fantastic one. Hopefully it'll be one I'll be talking about later.
Beautiful. Yes, our Four Winds Diversified Project client, Circa 81 Design. We're happy to refer, and we want to continue this with each and every one of you as an ongoing basis, a referral program, resource development, partnership development. So I appreciate that. Shout out, Fernando. Next, I would like to Miss Veronica Lane, bring Miss Veronica Lane. As we were preparing and talking with you about this topic, you mentioned that there are several government guarantee programs with benefits and differences. Can you please expand and elaborate?
Perfect. Well, happy to do so, Russ. So if you go to the next slide, I'll probably talk a little bit more in depth about some of the types of financing we do here, especially highlighting the different government guarantee programs that we utilize. So one of the more common ones throughout Indian country is the guarantee program that's under the Office of Indian Economic Development, OIED, or what we usually refer to as the BIA program or the BIA guarantee program. They have two programs, and one is the insurance program, where it's really geared to help smaller businesses obtain financing if they have issues with collateral support. The program's lending range is for us at a minimum of 100,000 for our bank. I believe you can get insured guaranteed loans from native CDFIs at a smaller level than that, but the maximum loan amount for this is 250,000. So with this program specifically, they have three primary parameters. One, the business has to be located on or near or impact a native community or a reservation or a BIA service area. A service area is kind of like the state of Oklahoma or the state of Alaska. Because of the high concentration of native populations there, the entire state counts. Whereas, like example, in New Mexico, Albuquerque would count as a service area as well, because of the proximity to all of the pueblos in the area. When you get a little bit out of those areas, then it can be a little bit challenging for small business owners to qualify for this program. Because of that, the other one is it would need to be a business that's 51% or majority native ownership, and you have to be a federally enrolled tribal member. So it doesn't really play well for state recognized tribes or tribal members who may not be enrolled in their tribes. One of the largest, I feel like, parameters with this program is the equity requirement. So this is a requirement directly from the guarantee program where it's a minimum of 20%. There are a couple of ways you can measure that requirement for businesses. If it's a startup business, it would most likely have to be a cash injection into the financing request at a 20% level. If the business has operating history, we could take a look at your balance sheet to see if you could qualify and meet that requirement via your balance sheet equity. So those are three parameters in the program I usually like to highlight just because they kind of can be a determine whether or not you could qualify for that. The other guarantee program under the BIA is just their full guarantee program. This really doesn't have a maximum limit. I think they mentioned maybe upwards to $30 million is the largest loan that they could guarantee under this program. So this one is kind of for larger scale projects, large or mid to large size businesses. They all have the same parameters that they have for the insurance program that I outlined. This one has a higher fee of 2% for the program. There's no annual servicing fee. I should mention on the insurance program, there is a 1% fee. And under the insurance program, the bank has autonomy to provide the approval ourselves. So it really doesn't impact like the loan closing or adding additional time into your loan application. Whereas under the full guarantee program, the BIA will need to review the application, which we submit on your behalf to get their approval. So it could add some time into when the loan could actually close. If you go to the next slide, we also are an SBA lender. So we do 7A loans here at the bank. I've been trying really hard to do our first 7A loan on trust land for a small business owner. I got super close once, but ended up not going through. 7A loans are really for, I want to say like equipment purchases, smaller size kind of purchases, This one is directly with the SBA. The reason this may work on trust status land is if we were doing equipment financing, because it doesn't have to be secured by, property or land in that instance. Because this program otherwise is really tied to fee simple land. So if it was something property related, a 7A guarantee program wouldn't really work for the business if it's located on trust status. This one, the equity has a little bit of more flexibility in equity requirements. It can be as low as 10% up to 20%. It really depends on the business and the risk profile. Lending range is kind of, like I said, in the smaller kind of business, loan terms, 5 to 10 years, and then the SBA approval is required. There is a tier fee structure and an annual fee. If you go to the next slide, Russ. So this is we also do 504 financing under the SBA. This is specifically for instances where the business is located on fee simple land. It's usually secured by the commercial real estate. So we have done a couple of these loans in the Denver area for a Native-owned business who works in the Montessori business and has a couple of schools here in the area. So there are size limits for the loan and the guarantee program overall. This loan can support, like I said, real estate, fixed assets, constructions, and renovations. And as I mentioned, it's usually commercial real estate secured. So lending range is up to 5.5 million. The 5.5 million is an SBA overall limit. So at any one point in time, a business cannot have more than 5.5 million guaranteed by the SBA. This one, the terms are a little bit longer because, as I mentioned, it's real estate secured. And then we work with CDCs because there are really competitive rates and different tier structures with this funding program. If you go to the next slide, we also utilize guarantee programs under the USDA. So they have a business and industry, commonly referred to BNI, or community facilities, which we call CF loans. And so those two really cater to very specific projects. USDA plays really well in Indian country. They are trust land eligible, so your project can be located on trust land. It can be for nonprofit organizations as well. Tribes have utilized these types of loans, for instance, to potentially build like a equity is what we've utilized this for. That was tribally owned, and there are exclusions under these types of programs, so they're very specific. And then we obviously can help you answer any of those types of questions if you have those types. Equity requirements are also a little bit more flexible under USDA as well. And then their lending range is up to 25 million. USDA approval is required. The reason why I mentioned getting approval from the guarantee programs is because that'll add time into the loan process itself, which is something you should definitely be aware of as a small business owner. If it's like a really immediate need, it just always keep in mind the time that it might take for you to get a loan approved through the entire process. Next, and the last programs I'll talk about that we do that kind of fall under the government guarantees, but not really because they're tax credit programs. So we do new market tax credit financing as well as low income housing tax credit structures. So late last year, NAB was actually awarded a new markets allocation of $50 million. So that was really exciting news. We were one of only 2 CDFIs who were awarded that specifically were Native owned. So really happy about that. And we're hoping to deploy, I think these funds are for up to 5 projects in Indian country. So really looking forward to those loans developing over the next couple of years. For the new market side, we can do source loans to the tribes. We do construction financing. We do permanent takeout financing. New markets is a very, very complex financing structure. But if you're interested in looking at that, these are for really large scale projects. We'd be happy to set up a call and share the knowledge on how that could potentially work, because it's a really huge benefit for projects to be awarded tax credits that can then turn into equity at the end of the financing structure. Low income housing tax credits is very similar. So we worked with tribes or tribal housing authorities. We also have combined the HUD Title VI loan guarantee program under these structures with some of our projects. So We can also do construction financing, permanent takeout financing. Again, this is also somewhat of a little bit of a complex financing structure, but we're very well versed in it and have been doing it for years. So one of the things I should mention about new markets is NAB was actually one of the very first banks in the entire country to couple that program with a USDA guaranteed loan. So that was really exciting to be one of the entities who took that challenge on to really help solve a problem for Indian country to make sure that they could work together and get financing projects done. So happy to answer questions or take calls about talking about these two products. But so that really talks a lot about like some of the financing that we do and the government guarantees and just other support programs that we utilize to really help us get financing done in Indian country, because of all of the challenges that we all know are out there, there's definitely the need for these types of support.
Beautiful. Thank you, Ms. Lane. I'm definitely going to have to give you a call back to talk about that. I do work with our local housing authority at Laguna, so I will have to definitely give you a call back for those introductions. Mr. Lee, quickly, I understand Bank of America has a government contracting team. Can you please expand?
Yeah, Russ, we do have a dedicated national government contracting team. And so if you are a government contractor and you're growing your business and you find yourself all of a sudden in an enormous situation where you got tens of millions in revenue and you need a strong partner to help you out, or we're going to be there for you. We have a national team. Like I said, they operate nationwide. A large part of our team are actually former contract officers. And so we do have that resource available with a ton of research. We bank all the biggest federal contractors out there. So we're happy to work with smaller organizations as well. Thanks.
Thank you, Mr. Lee. So what I plan to do is I'm going to combine the tips and advice section with our questions, our direct panel questions. We do have a lot in the chat right now, as well as a lot of questions in the Q&A dialog box. Again, for those who would like to ask questions, you can either use the chat and or Q&A dialog box. So right now I'm going to open the panel for questions. We do got a lot of hellos from our attendees. Okay, we got a question for Mr. Nate Lee from Edgar Tassone. Goes Yate, he goes, Nate, is the minimum credit score 700 flexible? For credit scores under 700, are they flexible?
Edgar, thanks for the question.
So yeah, okay, go ahead.
Yeah, no, that's good. Great question. There's not a lot of flexibility on that for our small business loans. But there are other options available. Like I said, there was that one line of credit that I was showing in the middle of the slide, which is a cash secured option or a secured option. That's another way to get past that 700 credit score minimum requirement. If that didn't work, we could also work with other CDFI partners and other collaborators that we have in Q. Thanks.
Beautiful. Nicole or Miss Lane or Fernando, would you like to take a stab at that? Minimum credit score 700 flexible.
I think I can make a quick remark. We kind of work with the borrower to see if they have quite a lower credit score, what's really impacting their credit, and then understanding if it was like a one-off situation, if something that can be explained. I will say that would be a little bit more challenging if you had open collections, primarily because of the guarantee programs we utilize. That's really something that can't be open at the time. So we would start to have you work on remedying that type of situation.
Thank you, Ms. Lane.
Yeah,
For us,
really quick.
it's not a factor.
I mean, for venture cap, it's not a factor for us too, but what could be a factor if it turns into something that turns into like a litigation or anything that is a pending lawsuit, then that does become material within our due diligence.
Yeah, and Russ, if I could add something real quick to this.
Right ahead, Mr. Lee.
Yeah, go ahead. So I mentioned earlier that I had a quick little announcement that I wanted to make
Yes.
regarding our Better Money Habits initiative. So as part of our overall financial literacy efforts, I'm actually pleased to announce that yesterday we launched a new platform for small business support in partnership with one of our longtime CDFI partners. Yesterday, we had a press release announcing a new B of A platform that connects small businesses to CDFI capital and coaching. The new platform is called Access to Capital Connector. It enables small business applicants to answer a series of questions to become pre-qualified and presents them with the platform participants best positioned to serve their unique situations. In total, there's more than 150 CDFIs and other support organizations that are participating on the platform. You can see my LinkedIn page for the details of that exciting announcement. Thanks, Russ.
Thank you, Mr. Lee, and congratulations. I do have a question for you, Nicole, from Mr. Brandon Morris. Nicole, do you run into many or any issues working with indigenous companies in the US, Mexico, or elsewhere as far as regulation currency exchange?
Right. So currently, Raven, we only deploy capital in the US and Canada. So we are strictly working with the US dollar and Canadian dollar, so USD and CAD. And we don't really have any currency risk in that, because when we make an investment in a Canadian company, it's obviously in Canadian dollars. When we make an investment in a US company, it's US dollar.
Well, and I do have a follow-up question from Ernesto Valarni. Nicole, what stage do you invest in, and what is a typical check size or funding commitment?
Yes. So typically, Raven, we will invest anywhere between pre-seed, seed, all the way to Series A or Series B rounds. And our check sizes can range anywhere from $250,000 to about $3 million.
Excellent. I did get a reply or a comment from Mr. David Beaver. Kudos to Native American Bank, who processed our PPP application and got us $2 million back when the program was in place. They were great to work with, and Veronica did a great job. So shout out from Mr. Beaver.
Thanks, David. Thanks for the shout out.
And then I did see Nicole also did a couple of answers within the chat. Hello, Ernesto. We invest in pre-seed, seed to Series A and B, and our checks usually are around 250K to 300 million. Okay. Let's see. All right. Okay, Stanford Lake to everyone. Is it more difficult to lend if a business is on tribal lands than off the reservations, since there will be limited assets that can be leveraged for a business loan?
I can take that question, Russ.
Yes.
It tends to be more difficult, and not a lot of banks feel comfortable lending on trust land, especially probably to smaller size businesses. And that's really where a lot of the guarantee programs come into play. But I would say find a bank or an institution that understands how that works, because we would need to be very familiar with sort of the tribal laws in your specific area. But I don't think it's something that should deter you from requesting financing. And in his case, he also talked about the Hub Zone AA. If you do contracting work, there's ways to get financing related to the contracts that you have won. Fernando touched a little bit on this. It's asset-based lending, AR lending, and a lot of banks can offer that even if you are on trust status land, because it's really taking a position on those contracts and not necessarily the land or the business location itself. So it tends to be a little bit more difficult when you're looking at real estate financing, but it's not impossible.
Beautiful. Yeah, he had mentioned, I've been reviewing about moving to tribal lands with advice from Mr. Mike Peacock for Hub Zone certifications in 8A. We just wanted to also mention that. Stanford Lake, Yate, Veronica, and American Bank. I highly recommend them for tribal loans. Good group from previous meetings with them. And then I will send you a transcript of answers, Mr. Lake. Okay, now on the question and answers from Mr. Beaver, David Beaver, Fernando, what are the rates for the first 30 days on a receivable?
Question. Yeah, it's going to vary obviously based on volume and who you're doing business with, but on average, I would say we're typically going to be somewhere around the 2.5% range of the face value of the invoice. And then once we go past the first 30 days, we typically are breaking that up into 10 or 15 day or maybe even a daily rate, just depending on what makes the most sense on what your typical average terms are.
Beautiful. Thank you. Thank you. We got another question from Mr. David Beaver to all panelists. Do you have any issues with taking a subordinate position on UCC if you're not able to meet or exceed a line of credit that a customer may already have with another institution, but may still prefer to use a more traditional financial institution other than an AR entity? Do you have any issues with taking a subordinate position on UCC if you're not able to meet and exceed a line of credit? Anybody?
I can answer on my end. So we can go in a junior lien position on the factoring side only. We can't do PO or asset-based lines of credit in a junior position. The caveat to that is, though, I mean, there has to be enough accounts receivable, right? So if you have an existing line of credit for 100,000, let's say, and for whatever reason the bank cannot not provide any additional funding on top of that, but you have accounts receivable in excess of call it 300,000 or 400,000. Now we have something where we can play with, right? There's enough there, additional collateral there that we can fund behind the bank. But if you've got 100 in receivables and $100,000 line of credit, there's really nowhere for us to go, unfortunately, and we wouldn't be able to do anything. So it's on a case by case, but it's not a deal breaker to go in a junior position. I will say that it has to be either a traditional bank loan or an SBA loan. We will not go in a junior position to an alternative funding source.
I would say my answer would be the same too, Russ, in that instance that Fernando just talked about. We would take junior positions on maybe if it was like a piece of equipment that still could be valued to cover the collateral position on the additional request. But otherwise, yeah, if it's AR based, we probably wouldn't be able to as well.
Excellent. Mr. Lee, anybody else?
Yeah, I'll just add, we're same thing. I mean, we're very limited on our ability to take a second position. It's very highly unlikely for us to do that.
Thank you. Thank you for that. Okay, a follow-up to all panelists. Do your underwriters have certain thresholds of AR that a company may have that are aged more than 45 days to determine the level of credit that can be offered? And then okay, have a turn down. Okay, I'll let you answer that. Do underwriters have certain thresholds of AR that a company may have aged more than 45 days used to determine the level of credit that can be offered?
Well, yeah, I'm happy to kick it off again. So yes, so the 45-day mark doesn't bother us. It's really once we get into the 75 and 90 days, we definitely cannot go beyond 90 days. We that's kind of a hard stop for us unless the accounts receivable are insured. And so if you go out and get AR insurance, we can actually kick that out to 120 days and be able to finance those receivables. But typically once we hit the 90-day mark, if you don't have accounts receivable, we start to get a little uncomfortable. A day here and there is doable, but if it's consistently at like 100 days, we're going to have to figure something else out and potentially get some insurance on that, on the AR.
Yeah, we don't have anything specific with the 45-day marker too. Ours is we exclude anything that's 90 days out. And then so none of those invoices are counted towards the line of credit that we'd offer. Our lines of credit are really driven on industry specific. So like it would really depend on like what percentage we would offer on AR via what your business industry is. But yeah, no issues with 45 days for us.
Okay, he mentioned we have turned down a line of credit from a traditional financial institution due to the fact that we were offering a base on 80% of AR that was 45 days older. So that was just that. Okay. Carlton Fairley. Is there any way we can get direct contact information for the services offered? Mr. Carlton, yes, we will have at the end of this presentation and by tomorrow morning, all of our presenters' contact information to include emails. For those panelists right now, if you also would like to share your contact information in the chat, you can more than happily do so. But yes, you can reach out to us, Carlton, or any one of our panelists, and we can either directly get you in touch with them or you can contact them directly. Thank you for that question, Carlton. This question is to Mr. Nate Lee. What is going to be the new option for businesses who want a money market interest-bearing account that is currently woven through a Merrill Lynch hybrid that is going to be discontinued soon? We have been considering moving our business accounts to B of A and have in fact have a small amount there to start to transition. However, after using Merrill as our interest-bearing vehicle, we find out the type of Merrill account is no longer going to be offered. So what is going to be the new option for businesses who want money market bearers interest account currently woven through Merrill Lynch hybrid?
Yeah, I don't have any detailed knowledge of that. I mean, I heard that there is a product that is getting I guess moving on, but I don't have details on that. But if you want to, the individual who sent that question, go ahead and email me your question, and I'll work on getting you an answer for that.
Excellent, excellent. We got another question from Edgar Polzini. Native American Bank, what is the collateral requirement?
So we're pretty flexible on collateral. I shouldn't say pretty flexible. We can be flexible on collateral requirements depending on the project. We'll ask for equipment if it's financing equipment, if it's commercial real estate, whether you're on trust land. We take positions on the lease agreement that the business lease with the tribe. So that's very common for us to do. We work with the BIA to file our position with their title status reports. They're commonly referred to TSRs. So very familiar with how to do that. And that's how we do a lot of our collateral positions when we are financing projects on trust land. And that is always, I guess, an interesting question that everyone has. We're not taking possession of the property or anything itself. That really just gives us the option to step into the lease and become the operators or find someone else to operate the business. Very standard and typical of how that operates in Indian country. And then sometimes if the need is for unique collateral, we are very familiar with that. We have loans that are secured by settlement fund revenue, and then gaming revenue that's distributed to tribes, throughout California. And then also some resource revenues that some Alaska villages get or the ANCs get. So really familiar and flexible in that instance when it comes to Indian country, if that's the need and requirement for the project.
Thank you, Ms. Lane. Anybody else like to chime in? Okay, we are coming up to that point where we are going to be ending our webinar panel. Some key takeaways that I have for you and tips and advice that I'd love to share is number one, have a plan and always reevaluate. Two, develop strategic partnerships and resources and as an ongoing basis. Three, do not dwell on mistakes or failures, but learn from them. Four, don't be afraid to ask questions and ask for help. You don't know what you don't know. I would love to end this panel with any closing statements from any of our panelists. Mr. Peacock, Ms. Jones, if you want to say a few words, you're more than welcome to do so at this moment.
I'll go ahead and go first. Thank you, Russell, so much. And I want to thank Fernando, Nicole, Nate, and Veronica. Today was really exciting to learn about all the wide array of small business products, equity investment vehicles, alternative lending, and which are all vital to small business growth and sustainability. I learned so much today. Every day as consultants, we are faced with so many challenges in structuring financing and business growth and scalability, and just learning these products is wonderful. And leveraging all your knowledge and your resources, we are definitely going to be reaching out to you. And today was probably one of the best webinars that I participated in. And thank you so much for all the knowledge and being a resource partner. Fernando, Nicole, Nate, Veronica, you're a blessing to us. Thank you so much. Oh, thank you.
Ms. Jones?
Yes, thank you, Russell. This is an excellent webinar. Thank you for putting it together. And thank you to our panelists and sharing your knowledge today. And especially our participants, taking time out of your day to chime in to our Access to Capital webinar. Those were great questions, Mr. David Beaver. And yeah, I'd like to thank everyone for participating and enjoy the rest of your day.
Anybody else from our panelists? Any few closing statements, closing words? If not, again, we appreciate you all taking the time out of your busy schedules to join us. We will have this webinar on our Four Winds Diversified Project YouTube channel, so you're more than welcome to go back and rewatch the video. For those companies or organizations that will like a copy of our panel, our webinar in PDF format, please email, call me, or reach out to me. We'll be happy to email that over Dropbox. It is a huge file. And again, thank you, Fernando, Veronica, Nate, Nicole. Like Mr. Peacock mentioned, we want to continue this as an ongoing basis, referral partnership programs. And for those institutions that are also part of financials, we would love to work with you. Small business owners, please reach out. Feel free to contact any one of us, and we'll love to sign you up as clients. Again, have an excellent afternoon, a beautiful weekend. And again, thank you for this great day presentation. Thank you. Right on. I will now stop.